Hey traders, David Frost, LazyGapTrader.com. In this video, we're talking about day trading. More specifically, we're talking about gap trading and how gap trading is by far the single most consistent and profitable day trading strategy you're going to find across the markets today. I do a couple of things. The first one is I teach a course where traders learn two specific gap trading strategies. The first one is known as the morning gap trades. This is where stocks that are gapping higher or lower at the open create what's called an opportunity. And the opportunity is for traders that can identify a specific price where these stocks will first be drawn to like a magnet and then have a price reaction from in the other direction. In the course, traders learn everything they need to know in order to first calculate those specific price levels for themselves and then how to trade those morning gap plays. The second part of the course is known as the gap fill trades. When stocks do gap up or down at the open, they leave what's called an open gap. At some point in the future, those open gaps will be filled. In the course, traders learn how to track them and traders learn how to trade them. Not all trades are created equal, and therefore not all gap fills can be taken as day trades. Both the morning gap trades and the gap fill trades must meet certain criteria, which is obviously discussed in great detail in the course at Lazy Gap Trader. The second thing I do is I give traders an opportunity to get my gap trade sent to them each and every morning at 9 o'clock a.m. Eastern Standard Time. Here's a copy of the email that went out to traders this morning, and as you'll see, there were 6 potential morning gap trades on the board. Now, these are the opportunities that are presenting themselves in the pre-market trading activity. Not all these trades will hit their levels each and every day. However, if we get 1, 2, 3 trades a day, that's fantastic. Today, for example, we had Equifax, EFX, hit its specific price level. The stock was gapping much lower on some really bad news, and we were able to identify a specific level where this stock should have a price reaction in the other direction. You can see here, I say gap lower. Support levels are $118.98, 115.11, and I even gave 2 other levels even lower. If the stock was to trade down more, we would have been prepared to take trades at those levels. All these specific levels should provide price reaction in the other direction. Stop and profit target is about 60 cents to $1.25. These are minimum profit targets. Sometimes we get the minimum and sometimes we get a whole lot more. Let's go pick apart the chart of Equifax. So we're on a 10-minute chart of Equifax, and you can see here where the stock closed yesterday all the way up at $142.72. The stock was getting creamed at the open, taking a significant haircut on some really bad news that came out of the company about a security breach. We don't care what the news is. All we care about is that we can identify a specific level where the stock will have a price reaction in the other direction, allowing us to book profits. That's all we care about. Now, what you'll see here is in the first candle of the day, the stock came down and made a low of 117.25. That is slightly below the stop loss target identified in the morning email. However, what my traders understand is that when stocks like this are gapping lower or higher at the open and they have a wide spread, and at the time, the stock had a wide spread. That means the spread between the bid and the ask was more than normal. As you can see right here now, the spread is anywhere from 1 penny up to 8 or 10 cents, 3 cents. That's okay. That's normal for a stock like this. However, this morning the spread was 30, 40 cents, even 50 cents at times. And when that happens, and traders that are scared out of the trade, or even investors that just want to hit the bid and get out of the stock, what happens is they drive the price down lower because they're filled at the bid. So we know that, and we have to give these stocks a little extra room when the spread is wide. But here's the important part. The stock had an immediate snapback. That's what we care about, and that's exactly what's supposed to happen at these price levels that are identified before the market even opens for business. You can see what happened in just the second 10-minute candle of the day. So 20 minutes into the trading session, the stock made a high of $124.50. That's over a $5.50 maximum gain in just 20 minutes of trading from the level identified at 118.98 before the market even opened for business. Some traders might have gotten $1 out of it. Some traders might have gotten $2 or $3 or $4 out of it. In my course, I teach traders how to take some of the profit along the way and then turn a stock like this and a trade like this into a risk-free, emotionless trade, which allows you to get as much profit as possible without taking on any additional risk. In fact, without taking on any risk whatsoever, while already having profit in your pocket. That's how we roll here at LazyGapTrader.com. If you want to learn how to do this for yourself each and every day, then come over, check out the course. You can learn everything you need to know in order to trade the gaps successfully. This is a strategy that traders can use for the rest of their trading career. We have gap trades just about each and every day. It happens over and over and over again. I'm David Frost, Lazy Gap Trader. Thanks for tuning in, folks.